Let's look at a company in the streaming business. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. When we go here to the megatrends, we find streaming here. As far as performance, it is doing pretty well. It is, certainly more than double the S&P 500. If you go here to the portfolio, you can see that there are a bunch of stocks. We will look at iQIYI in this video. They are the one performing lowest from the low, been through quite the pullback. So let's here go to the company's website. So here it is. It is an Asian streaming service. As you can see, it is very much focused on the Asian market. If we go here to the charts, this is iQIYI. IQ is the ticker, and we can see that it's basically back to a very long-term support level. You see that at this level where we are right here, right now, there's been a lot of support. So if you draw in here some of the support levels, like you can see here a territory of support here as well. So basically, at this level, we have seen before that the bulls come up and they buy shares, which is, of course, rather interesting. There is some seasonality here, so let's look at the cycle patterns. So here is there is some kind of cyclicality here. The cycles have changed a bit over time. We had longer cycles before, they have become a bit shorter, but it certainly moves in those waves. So let's zoom in a bit. And by the way, there is only a 7% positive correlation with S&P 500 long term. Looking here at the shorter daily time frames, it's only 8%. So basically, there is no correlation with the S&P 500. That is rather interesting. So here we have the daily data points. You can see that these waves so much more clearly. When this stock has a rally, it can be rather big. So if you measure some prior rallies from the lows, like this one, all of a sudden 60%. The recent pullback is rather deep. If you look here at this rally, that came from a similar level to where we are now, approaching 70%. So from a technical perspective, also buying low and selling high, this is definitively a level where we expect the bulls to show up given the history. Around these highs, this resistance level here, that is a good time to become bearish short, as long as we don't have a breakout, of course. But at these low levels, that is relevant for us now. It makes a lot more sense to become speculatively bullish technically. Also looking here at the RSI, buyers do tend to show up at these levels. PPO, very low PPO, tend to attract buyers. What's very interesting here is the accumulation distribution is in a very nice uptrend. So there is a nice inflow of money. That is very good. Okay, but let's explore further. So here is the seasonality of the stock. We only have kind of 3 years of data, basically, because 2021 is not fully developed. The seasonality certainly suggests that April, May, especially June, they are certainly stronger than March. But the seasonality here is just, we don't have enough data to make any real conclusions. Looking here at Finviz, they draw this trend line, support, bounced here from support again. When we look here at the average analyst price target, they suggest, and there are quite a few of the big names covering this stock, they suggest a 44% upside from current levels. When we go to Saks.com, they have a number 3 hold, D value, but they have a B growth score. That's pretty good. And a momentum. Looking at the industry rank, bottom 39%. Yeah, they categorize it broadly as film and television production and distribution. But that is a rather broad category. I think that this is more specific. This is streaming. This is the future, well, it has already gained a lot of penetration, but it is the future of video entertainment, because people are cutting the code. And this company is based in Haidian, China. Okay, so to sum up my take here on iQIYI, I think that if we look here at the theme, streaming, it's very, very interesting. This is, however, one of the megatrends that it has already grown very significantly. So this is not like the beginning of video streaming, but it still is very far from where we expect it to be when it reaches full penetration. There is a bit of a caveat when it comes to streaming. There is a growing number of these services out there, and there is reason to expect consolidation and ways to deliver all the different content out there in one place. Because back in the day, cutting the code made financial sense. At this point, it doesn't make sense anymore, because if you are going to have the same range of content, then you have to subscribe to a bunch of services, and it becomes very expensive. And that is a problem. So I do think that there is the risk of some kind of disruption in the video streaming space sometime in the future. It's, of course, still unknown how it will come about. Will someone develop like some kind of Android for video streaming? Who knows? I mean, it's this, but that is like a risk factor. As far as iQIYI, it's part of a very interesting, strong theme. Looking here at the technicals, they were definitively supportive of a bullish thesis. Looking at the seasonality, we don't have enough data, so I am going to just gently ignore the seasonality. Because I do think that we need at a minimum 5 years or more of seasonal data to really conclude that there is some very strong seasonality. When we look here at the fundamentals, they are definitively supportive of a bullish thesis. Hence, taking all the evidence together, it is way easier to make a bullish case for iQIYI at these levels than a bearish one. So looking years into the future, I would say I am speculatively bullish. I would use the word speculative because I do think that something disruptive will happen to this space in the not too distant future, because the cost of subscribing to all of these services is becoming too high. It's a mess. It's a very messy market. A lot of people are subscribing to multiple. They have deals with friends where they share passwords. It is a mess. So there's something will happen. Maybe it will be like similar to iTunes, where you or Spotify, where you have access to all kinds of content, and those you watch the most, they will get most of the money, the biggest share of the money you spend, something like that. I'm not sure, but maybe more maybe pay as you go, where if you watch a lot of hours, then you subscribe to a higher plan. I am not sure how it's going to play out, but something needs to happen. The fundamentals, definitively. Of course, I will be definitively on the lookout for the company that will become the big disruptor in the streaming space that brings order to the chaos. So that could be a very interesting investing opportunity when it comes onto the market. Or maybe it even is on the market and we just don't know it yet. But that is the big X factor.